That's why demand is defined by desire, ability to pay, and willingness to buy. These are the three things which we need to be identified. And then when it comes to the definition of law of demand, and many people has been given many economists has been given a popular definitions, and it's basic demand, basic principle, basic theory, which gives you about the law of demand. Only the thing which I can suggest to Alfred Marshall has given a definition that the amount demanded, the quantity of goods amount demanded with a fall will increase with a fall in the price. It means that in simple words I give you here, other things remain constant. What are other things? I'll give you the note. Other things. What are the other things? Only you just identify these things first. If the price of a product increases, the demand decreases. If the price of the product decreases, demand increases, vice versa. Only thing, if the price of the product increases, the demand decreases. If the price of the apple increases from 5 rupees to 10 rupees, the demand ultimately comes down. If the price of a laptop, price of a cell phones increases, ultimately the demand comes down, because competitor products will be there, relative products will be there, and the people will switch over from one product to other product. And that's why, in order to determine the demand, in order to give you definition something about law of demand, if the price of a product increases, the demand decreases. And if price decreases, demand ultimately increases. What happens if the price is decreased? If there is any discounts is being given, if there is any slash discounts or offers is being given, or if ultimately the 10 rupees product is being given for 8 rupees, then what happens ultimately? It decreases from 10 to 8 rupees, so that the demand also increases from 5 to 10, 10 to 15, 10, 15 to 20. The same is also been given here, other things being equal. And this is a point which need to be identified. Other things remain constant. And what are the other things? Because when you are saying something about a law, a theory, there are some basic assumptions, that need to be undertaken. Those assumptions are called as other things. And what are those other things? Just we'll see in the next slide. Then these are the assumptions, and there should not be any changes in this. If you are saying that, if you want to prove this, price increases, demand decreases, price decreases, demand increases, these are the things which should be remain constant. What are those things? Income levels of the people, because when your income levels is changing, ultimately you try to purchase higher amounts of products. If your income level is 10,000, then you purchase only a cell phone up to 10,000. If your income level is 2 lakhs or 1 lakh, then your purchasing capacity will increases, and ultimately you will purchase higher amounts of product. That's why there should not be any changes in the income levels of the people, as well as no change in the price of the product. If the price of the product decreases or increases, ultimately that changes. And the quality of the product, improvements in the quality. When people says that new Colgate, new updated product and improvements in the product is being done, advanced products is being done, then ultimately people will choose. That's why we cannot apply the law of demand until unless these remain constant. There should not be any change. No substitute product, no new product should be released into the market, and related commodities should remain constant, and no change in customs, no change in taste and preferences. Population should remain constant. Climate and weather conditions. When you determine something about umbrellas, what we discussed in the classroom, then when the climate and weather conditions are same, if there is no same condition, if it is rainy season, we are determining the law of demand, and in the winter season, we are doing the law of demand, then ultimately it will change. And that's why the climatic conditions and weather conditions should also remain same, as well as the government rules and regulations. It means in form of tax rates and physical measures, what are things which are there, that also need to be remain constant. Whatever the given in the word definition, other things remain constant. These things should remain constant. There should not be any change in these products. There should not be any changes in these assumptions. And if we satisfy these assumptions, then easily we can prove the law of demand. We can do this by using a simple illustration. This is a simple illustration called demand schedule. Demand schedule is a table which presents something information about price as well as demand. Price is been given in form of rupees. Then if it is 5 rupees, the demand is 100 rupees. If the price of the product decreases from 5 to 4, then it ultimately from 5 to 4, what happened? The demand increases from 100 to 200. If the price of the product decreases from 4 to 3, then ultimately the demand increases from 200 to 300. If the price again 2, then it increases. And whatever been given in the law of demand is the same. If the price of the product decreases, the demand increases. Then this is how we can provide a demand schedule. It consists of two things called price of a product and demand, and we are going to represent the same in form of a graphical representation. What happens in graphical representation? On x-axis, the demand is taken 100, 200, 300, 400, and the y-axis, we have taken something called a price, and we are determined it over there in the graph. See, the demand curve always slopes down. The demand curve always slopes down, and this is form how we can represent. And when a question asked in the law of demand related to law of demand, define law of demand, give assumptions, and then draw a demand schedule and interpret a demand schedule and draw the diagram, draw the graphical representation of the demand, law of demand, and then explain the law of demand. And then finally, we should end with some exceptions. It means that where are the cases where we cannot apply the law of demand. Certainly, there are some cases where we cannot apply the law of demand. Those are the exceptions which also been given over here. The reasons itself that for this type of products, the price, even the price increases, the demand never come down. See, prestigious goods, luxurious goods like cars, golds, diamonds, and what other things are there. In those cases, if the price of a product increases, demand also increases. There is no way that the price decreases and demand increases. If the gold price decreases, if the car's price decrease, no one will come forward because that may continue for a longer period of time as a decrease may come down and the people never come forward to purchase the product. The same thing happens for luxurious goods, diamonds, jewelry, what other things are there. Even the price increases, people will come forward to purchase. That's why law of demand cannot be made applicable. Speculative effect in form of share trading, lotteries, or whatever the forms are there, where speculation means where people speculate that it may increase, that may decrease, and what are the changes may happen in the future. It is not been strictly regulated. It's a speculative. We cannot estimate, and we cannot expect what happens. And for those type of lotteries and also as well as trading, share trading, and we cannot apply the demand because if the share prices increases, the demand ultimately increases. The share price increases from 10 rupees to 11 rupees today, and people will come forward to purchase the share, where the law of demand doesn't work. And that's why speculative effect, the places where a speculative effect is there and there, it doesn't work. And next, Giffen, a person called Giffen, economist called Giffen, has given a paradox. He is giving a suggestion regarding inferior goods. Inferior goods. What are these inferior goods? The people which purchase routinely inferior goods, it means that bread, butter, and whatever the jover, whatever the wheat, whatever things are there, those are called inferior goods. And in those cases, inferior goods also, then the law of demand doesn't apply because in these cases, law of demand, where the demand for the price of the bread increases, people also come forward to purchase. They never decrease their consumption. If the price of the rice increases, if the price of wheat increases, people never leave those goods. The same way, with regard to inferior goods also, we cannot give the law of demand. Then ignorance of the customers. As the people may not be having some idea about the product, utility of the product, usage of the product, price of the product, then people may come forward to purchase. What is the purpose of this product and what may be the use of this product? People might not be known, and if the people is being given that, if the price is being slashed prices is being given, people even ignoring the utility of the product, they come forward to purchase. If you are going to a roadside and the people saying only 50 rupees, and the people come forward to purchase because even they might be not known about the usage of the product, but people says it will be useful to you in every day, then people come forward to purchase the product. That's why ignorance or the lack of knowledge of the customers also, then people may come forward to purchase, and that's also where we cannot apply the law of demand. Next, consumers' psychological bias, that it may rise further, it may increase in future. The price of the product may increase in future, so that better to purchase more and keep it in the storage or store, and whatever the things which remain there, then the price, everyone might be seeing that the price of the rice increases, and that's why better to purchase 2 or 3 quintals of rice in your house, and they keep it as a storage and they'll use it. The same way happens, the psychological bias or illusions, what the customers will think, and that way also, then we cannot identify. So consumer bias. And I hope inflation and depression, increase in the prices in the economy, in the countries facing inflation, where the increase in the prices, the demand also increases. when you see the some countries where earthquakes or what other things may happen and inflation is being there, and there people use it to purchase in higher quantities. Depression is decrease in the prices. Economy situation, if a country is facing some inflation, depression situations also, then we cannot give this exemption, this law of demand. And there is a law less supply. If the product is having less supply and we cannot determine, even the price is decreased, then the demand doesn't increase because no prices, no supply, no demand, and we cannot identify. It's called fear of shortage or less supply. And in this case also, we cannot apply the law of demand. And this is what we require with regard to the demand, law of demand. Define demand, define law of demand, use some assumptions, present a demand schedule, and present a graphical representation of the law of demand schedule, and then give exceptions, exemptions, and then that gives you a law of demand things. Is it okay, or shall I repeat it once again? Certainly, if any doubts. Okay, if it is okay, then I'll go for the next one. There are some words called determinants of demand as well as elasticity of demand. Even if you're not willing to answer me directly orally, then you can also text me in the chat box.
Okay, sir.
Yeah, okay, ma. Yeah, we have few things called determinants of demand. These determinants, what do you mean by these determinants? Because what are the factors which influence, factors which determine the product futures which we determine, then sorry, there are few things called which factors. These are the factors which influence the demand. When you're estimating, when you're determining some demand for one product, what we see, when we say that the demand for laptops is more, we identify few things. How the price of a product, what are the prices of the laptops, whether the prices has been decreased or increased, what is the statutory price, what is the standard price, which we need to afford a laptop. If people says 30,000, people check around the 30,000 price. People says a cell phone is for 10,000 and we'll check around the 10,000. How we are saying 10,000, 30,000 based on the price of a product, average price of the product. And you always choose, if it is 30,000, you choose 35, 40,000 if your income levels is more. If it is 30,000, you will choose 20 to 25,000 if your income levels is low. That's why income levels of the consumers also been a primary factor which need to be identified. Income levels of the consumers. Price of the product is first one. Second one is income. Second income levels of the consumers. Price of the related goods and services are also being the third one. And the consumer expectations. If the consumers expect good quality of the products, and companies will come forward to produce good quality of the products, and the number of buyers in the market. Every time we need to identify. I give you the example of Tata Nano. Then they wanted to know something about how many number of people will come forward to purchase our product. The same way when Nokia introduced a smartphone, what they had done, they made a survey, and the people who are interested to purchase a Nokia smartphone, then come and register with us. And so that they come forward and they made the registrations, and so that the people can purchase, and so that they can increase their productivity. They can increase their productivity, and that reaches them. That's why these are the 5 determinants. These are the 5 determinants which determine the demand. And we also have a word called types of demand. And what are the things are there? The determinants of the demand is a short answer what we'll get. And as last, when you get something about types of demand, then individually they may ask you what is individual demand, market demand, or total market demand, segment demand. They may ask you as an individual things also for the short answer. And that's why we need to also concentrate. And when you refer something to a Google, or when you refer to a textbooks, then people may not be give you all these definitions, only few definitions. Either they give a classification of individual market demand or any one of these, but all together may not be available at certain place. And what I have done is I have made together all the classifications, all the different types of classifications of the demand, and made into one place. And the same matter is also been given in your material also. First thing, what is individual demand and what is market demand? Individual demand is a demand of one individual consumer or individual customer. If I'm determining the consumer behavior, determining the demand of one person of your classroom. determining the demand of one person of the classroom, one person of a classroom, it is called individual demand. Then if you're determining the demand of all together about the all your class together, all together, then that is called a market demand. Number of people who are purchasing a cell phone, only one. If you're taking all together of the 60 people or 100 people, then that becomes a market demand. Total number of purchases, if individual one purchases 10 products, and in the total market, it goes around 1,000 products. It means that number of people who are purchasing cell phones will also come forward, and then that gives you a market demand. Total market demand, market segment demand. If you are classifying total market demand is all your engineering college, from among only one section or one classroom, IT is separate segment is being taken. Higher level income group, lower level income group, urban people, rural people, people having bank accounts, people doesn't having bank account. We are determining based on one segment. It means that we are dividing market on certain criteria or certain future, and then we are making the analyzing the demand for the product. Total demand, market demand is 1,000, and among 1,000, how many number of people are belongs to the higher income group? How many people belongs to lower income group? How many people belongs to rural areas? How many people belongs to urban areas? And whatever the characteristics is there, we are segmenting, dividing based on one certain criteria. It is called market segment demand. And next one, we have a word called derived demand and direct demand. What is derived demand and what is direct demand? Derived demand is a word which we define in order whether the demand for one product is derived from other product. Derived demand is which we make a note of. Derived demand is from the product. The demand for one product is derived from the other product. Where there is a demand for cotton, yarn, and what other things are there. The demand for one product, the subsidiary, the raw material is the first thing. The cotton should be produced, and if the cotton products is having a good demand, then the cotton yarning and cotton farming will be getting the demand. The same way, derived demand, the products is derived from the demand for one product to other product. And whereas direct demand is what we consider. Direct demand is what we consider directly from the one product, directly from its direct own product. Direct demand, we can estimate directly the product of direct demand from when the customers, 1,000 people are coming forward, then this is called direct demand. When we are determining the demand of, when we see something about speakers, laptops or desktops has to be there, then the speakers for laptops also increases. When the laptops is been increasing, no speakers is required. When the desktops is been increasing, there is a demand for speakers. The web cameras, when the desktops is being used, and web cameras will be used. If there is laptops, and there's no need of purchasing web cameras. That's why the product demand is been derived from one more product, which is a subsequent product, from where we can determine the demand for one product. It is called derived demand. When directly we want to estimate the demand for one product, directly you can also estimate. And we have a word called industry demand and company demand. You might be seeing one company where you got pleased, TCS, Accenture, and Wipro, what are the things are there. If you're analyzing the demand for one company, it is called company demand. When you are determining the demand of all IT sector, all the companies which are working in the IT sector, then it is called industry demand. The cell phone, the demand for one company called Oppo or Vivo phones was company demand. Hero bikes or Honda bikes or whatever the bikes are there, then that is called company demand, one company. Whereas automobile industry altogether, we are taking demand, it is called industry demand. Cell phone industry, electronics industry, then altogether we can take the industry demand. Then we have what called short run demand and long run demand. Short run demand for a shorter period of time. People in anticipation to purchase something for a shorter period, where there is a need of when there is a COVID situation that happens, where everyone came forward to purchase some dry fruits and what other things are there, which gives you some healthy food, and which made them to be cautious on their health, and they made their own purchases, which gives you some healthy and nutritious food. And short run demand. And whereas long run demand, rice and wheat and whatever the jowers, what are the things what we eat, what we consume, and that goes for a long run demand. For short term purpose, whatever you purchases in order to satisfy yourself and satisfy your things, satisfy your needs, and that is called a short run demand. And long run demand is what you consume, what you purchase, and what we utilize for a longer period of time. Price demand. These are the two factors which we need to consider. Because when we see the law of demand, price is increases, the demand decreases. When the price of the product increases, the demand decreases. But whereas income demand is certainly different. When income increases, demand also increases. Because when your income has been increased from 10,000 to 20,000, ultimately what you do, you purchase more. There is no way that you decrease. Income demand is what relationship between income increases, demand also increases. Income decreases, demand also decreases. In case of price demand, price increases, demand decreases. But whereas in case of income demand, the price increases, the income increases, also demand also increases. And that's the thing what we need to consider. And whereas we also have a word called cross demand. And it is what the price of not only own its product, it is something about the price which is related to the consumer products as well as the related products. We cannot determine the price of one product. Cross demand is what we need to identify where there is a demand for one product as well as Y product also. Where we can see X and Y product. Sugar, the price of a sugar increases. Ultimately, the price of a tea or coffee also increases. The reason is because it's a supplementary product. When the price of a milk packet increases, ultimately the tea prices also increases. When the price of the petrol increases, the taxi prices will be increased. And the same way, when you're determining when the price of a product increases, whether you're determining the price of other product. Cross, it means a cross demand increases, but because not only relate on one product, byproduct or relative product are commodities which we feel as substitute products, and all those things also will influences, then that is called a cross demand. And we have certainly elasticity of demand concept, where we go through price elasticity of demand, income elasticity of demand, and cross elasticity of demand, and that we need to consider. And that is just a minute, and that is what we need to learn something in the next classes. And this is what elasticity of demand. And we have three types of elasticity of demand: price elasticity of demand, income elasticity of demand, and cross elasticity of demand. And that we will see in the next classes.